Hey guys, welcome back. I know it's been long. I dropped a market review video, but here is it. I want to be doing it in every 2 weeks rather than every week. So bear with me if I don't drop if I don't drop the market review and pre-weekly forecast any week. And also, there's a very important topic coming up next week. I'm still working on the lecture video. The topic is very important for swing traders who have less time to trade, who are schooling, and if you are still a part-time trader, that video is not any kind of video you would want to miss. Okay, so welcome to today's video. We'll be looking at market review, and as our custom is, market review is mainly done on Nasdaq because that's what I mainly trade, and that's the instrument majority of my students trade. So it's only fair I do market review with that particular pair. If I want to do market review for Euro USD, GBP USD, and so forth, it will take a very long period of time before the video comes to an end, almost an hour plus. So I don't want that. I don't want my viewers to feel bored. Okay, so this is all the week's price action on Nasdaq for July 29. Okay, so what we're looking at here is the beginning of the week. You can see the week begin here. This dashed horizontal line is the new week opening gap. And like I thought in the new week opening gap video, you can see how price is acting as price is using that level as a support three times, not even once. Using the first time, the second time, and the third time in 3 different days. Okay, so this can be a very good trading strategy. Trust me. I used this particular strategy um once this week, and I'm going to show you the setup and everything. And it was my biggest trade for the week. Okay, just that I don't like sharing all of these stuffs outside there, but I'm very free to share it here on the video. But we have this Friday high. We have the original buy side liquidity from last week. We also have the previous week low, and you can see what Monday did. Monday took out that low first before rallying. So this little move on Monday was a manipulation phase, and the rest was the distribution phase. Although this sell was unexpected, but it is what it is. This sell on Thursday was unexpected because this is a distribution phase, and in the distribution phase, trust me, most of the time you don't want to be countering the trend. If you wanted to pick this sell in a very good weekly cycle price action, this would have taken you out if you wanted to pick this sell. But on Thursday, price gave a very good sell, and it is what it is. All right, so let's look at Monday's price action. I did not trade anything on Monday because there was nothing to trade here on Monday. I was looking for, like I posted on the Telegram community, I was looking for Monday to take. I see that Friday's low and Friday's high was very vulnerable. That's what I posted on the Telegram community on Monday. Friday's high and Friday's low was very vulnerable. So price came for Friday's low first. And you know what is what? You will look for a buy entry model to take to that high. And that was what was supposed to happen that Monday, but nothing like that. Monday ended up as a fold. You know what I talked about? I talked about fold. I talked about fold some time ago. Is a day where price supposed to reach for a draw on liquidity, but did not, and instead ends at as a indecisional candle for that day. You will not see this particular thing anywhere. This is my own main um strategy. It's a piece of the puzzle in my strategy. Okay, so Monday was supposed to reach for, we're expecting Monday to reach for buy side liquidity. That's Friday's high. Not that we know when it will reach there, but that was our expectation. But instead of Monday to do that, Monday ended up as an indecisional candle. You can see this is a doji. You look at it, price opens, rallies high, rallies low, and closes at the same place it opens. So this is what I call the fold. So the next day, what you be expecting is for price to complete what price was supposed to do. it was supposed to take out that high and it did not. So the next day prices just have to do that. If you wanted to look for a buy setup after taking out that previous week low, you can see there's no OT on the 5 minutes. There's nothing to even trade there till market closes. Okay, so this is not a very good day to trade. Now looking at Tuesday, this is Tuesday's price action. I use the vertical line to divide them, so it can be very obvious. You can say that Friday's high, buy side liquidity, which was supposed to take place on Monday, that reading, but did not, and we continued on Friday. So, what is the best entry, or what is the best setup for continuation? I've thought about this. If you're following the channel very well, you know that the best entry setup or the best setup for continuation trades is the intraday AMD strategy. If you don't know what I mean by intraday AMD strategy, so if you don't know what I mean by intraday AMD strategy, please go back to the video and watch that particular lecture. Don't miss any of it. Now we have this fair value gap, which is an intraday AMD setup that was created on London session. We also have another one that was created on New York session. Okay, so for weeks now, I've been focusing mainly on trading only the New York session. I think if you want to do that, you can also do that. Although there are still many setups you can pick on London that will be very profitable, yeah. But due to my recent schedule, I've been focusing only on New York session. If you have the time, there's no harm in trading London session, okay? So I did not take this first trade on the London session. I waited for the next intraday AMD that will occur on the New York session, because this is ideal. It's ideal. Trust me. If price wants to go higher and we don't have any drawn liquidity on the previous day, let's say this was the previous week, a previous day low, sorry, but price doesn't have to come to this place. Price doesn't have to come here because we are rushing for a liquidity. This is the best setup, trust me, to pick for this kind of trades. Let's see the entry. This entry was just 2 weeks to reward ratio. Yeah, to some of you it doesn't make sense, but I'm not here to preach about risk to reward ratio. Why I took this trade, and I wanted to make this very clear. If you have a setup trading into intraday AMD or previous day fair value gap, right? The chance of price using that fair value gap as an intraday AMD setup is 60 to 40. So you have a very good chance. From all my backtesting, all my studying, the chance of price using a fair value gap for intraday AMD setup is 60 to 40. Now, that 60 to 40, you can either wait for confirmation. Extra confirmation is just to be careful. If you don't see confirmation and you take the trade, that means you're not extra careful. But if you are using that rating of 60 to 40 to pick your trades, which is what I did on Tuesday, then you get a very low risk to reward ratio. So what I did was that I knew price was heading for this high. That was my first confluence. That was my first directional bias. I knew price was heading for the high during London session, New York session. So I waited for the intraday AMD on the New York session, which was this. And instead of waiting for, this is 5 minutes, right? So instead of waiting for, let's say, entry model, which was this unicorn entry here, place my trade here and just take profit here, you can see that's not enough. That's not, even though my risk to reward ratio would have been more, at least 2, but that was just like buying in a very big premium. I don't do that. So instead, I picked my trade here from the beginning of that fair value gap and my stop loss at the end of that low. That's telling me that, okay, my chance of this trade playing out is 60 to 40, and it played out. That's because I've traded this particular setup for a very long time, and I know if price is going to respect the fair value gap or if it's not. That's why I tell you to use the entry model, because you don't have that much experience with the setup yet. But if you want to be doing it like this, then no problem. But study it first, practice it first, either with demo or I don't know, just practice and study first before you do this on your live account or your profile account. Let's look at the next day. So Wednesday, after price took out the high, you can see we traced back for the new week opening gap. Let me give you a bonus. Let me give you a bonus for Nasdaq. This is a bonus. Pick your notes. Write this down. I don't wanted to say this, but let me just say it as my student. Okay, so for every day, write it down. For every day that there is FOMC in the evening, FOMC mostly comes at New York PM. That's New York PM around 2 p.m. or 1 p.m. I think so. Yeah, New York around 2 p.m. That's when FOMC comes most times. So that for every FOMC day that happens on New York PM, don't trade the AM of that day. Don't trade New York AM. Don't even trade London session of that day. Trust me. You can go back, use your Forex factory calendar, and track all these days that this thing happens, right? And go to your chart and study them very well. Trust me, for every FOMC day that happens on New York PM, don't trade London, don't trade AM. Why? Because price goes for the farthest drawn liquidity. The farthest. Now, let me explain that. Look at Wednesday. We have the first drawn liquidity here, which is previous day low. We have the second here, which is previous day low. And we have the last drawn liquidity of the previous day, which is a new week opening gap. Now, if you were to trade, let's say London or New York AM, and price took out this previous day low, and let's say give you a confirmation there on the 5 minute or whatever, because this is a 50 minute, and you pick a buy there, you would have been taken out. If you use this other previous day low also, you can see this previous day low give a sweep. You can see this sweep, this candle sweep. If you use this either, and if 5 minutes gave you a confirmation and you bought there, you would have been taken out. So every single FOMC day, price pushes for the extreme drawn liquidity. Write that down. And don't pick trades on any FOMC day. Don't pick trades before FOMC. Once price takes out that extreme drawn liquidity, once price reach for that extreme drawn liquidity, you see a setup there after FOMC. Let's look at that. Okay, so this is the 5 minute time frame. This was FOMC happening around 2 p.m. You can see this is 2 p.m. See right there. 2 p.m. FOMC pushed price higher, pushed it lower, and higher again. Now, how are you supposed to pick trades here? Using the OTE, you can see that price took out a high, price took out a low, and broke a high. And this is after FOMC. Nobody knew that whether price was going to buy or sell, but I knew strongly that price was going to buy, because look at the different confluence. One, we retested on a new day or a new week opening gap perfectly. You can see that we retested on a new week opening gap perfectly. That's a perfect retest. Look at the bodies of those candles. Two, we were in a distribution phase, so we had a higher target, which was this other buy side liquidity and this other buy side liquidity. So this was a distribution phase target. We're supposed to buy. So if we went on selling on this day, we have been taken out. But that does not mean you should buy before FOMC. There are some people bought before FOMC, they got a good position, but I don't do that, right? After price reached for that new week opening gap, sorry, you are looking for an entry setup. Now, what do I say? With the 5 minute time frame, price takes out this low and breaks this high. That's, even though there's a lot of consolidation inside here, it's still there. You see the OTE leaves all of this fair value gap on the 5 minute, but this is not what I teach, right? If you are using a 5 minute OTE, you go down to the 1 minute time frame, find out your premium and discount, and look for the drawn liquidity on the discount if you are buying, or the premium if you are selling. Very important. Now let's go to the 1 minute time frame. So this is the 1 minute time frame. This is the break of that high, this is the sweep of that low, and this is your Gann box of Fibonacci to find out the equilibrium. Now this is our premium, this is our discount. You don't want to be buying anywhere here. This is not what you want to do. You don't want to be buying anywhere here. After FOMC, that's 2 p.m., price rallies, breaks that high, and comes down again. So looking at 1 minute time frame, where is our draw on liquidity here for us to take a buy? You can pause the video if you want. Well, the answer is there is no fair value gap, because most times you think it's only fair value gap. Fair value gaps are not the only draw on liquidity. We have highs and lows also, rejection blocks and stuff like that. There are many, right? So we use this low as our draw liquidity on the discount, because there was no fair value gap on the discount. If there was fair value gap on the 1 minute here, that would have been our entry, like the exact sniper entry for this trade. But since there was nothing like a 1 minute fair value gap on the discount, we are using the extreme low. Now note this also: if you have a 1 minute discount that is totally efficient, you can go to the 5 minute, go back to the 5 minute and check if 5 minute has a fair value gap in that discount or that premium. I'll explain this further. But for this was my entry. Price takes out that low, and there is my entry. This setup was longer than this. That's the extreme buy side liquidity, almost 30 weeks ratio, right? That was the setup for Wednesday, and you can see that this setup was just a new week opening gap setup, and it gave me the highest trade of that week. You can see that very well, and I held this trade for 2 days. So that, I think, New York session of the next day, price hit target and all positions were closed. Let's look at the next day. Okay, so this was that Wednesday and this was Thursday. So Thursday price hit that target and immediately returned sharply. So many people would have still be looking for buy, and trust me, I wanted to buy at this level. I wanted to buy because the distribution phase is mainly going in one direction, right? This is unexpected. There was a fair value gap here, 1 hour fair value gap there. The intraday for intraday AMD setup, there was a 1 hour fair value gap there. You can check your charts on Thursday. Price did not reach for that, so I did not buy. When price finally reached for that fair value gap, it came with a very large momentum, so I could not place any order. You see, that's why I don't use the limit order. So if I had that intraday AMD setup there and I have that fair value gap there, I was like, okay, let me place my limit order here and buy, because I was expecting a buy for that day. I would have been taken out so badly, but I used the market order. So when I saw that momentum coming very large, no, that was not my trade. But this is exactly what you would have traded on Thursday from hindsight, right? Price sweeps that high, and on the 5 minutes we break this low, and you see this sweep of high, this break of low. That's a 5 minute OT, optimum trade entry, or the simple entry model, anyhow you may call it. After that 5 minutes OT, we want to find out the premium and discount, right? We have a premium, we have a discount. Go to the 1 minute time frame. We want to look for any inefficient zone or any imbalance on that premium, since we are selling. But this is another funny thing. On Thursday, no, remember the other one was on Wednesday. This is on Thursday. On Thursday, there is no inefficiency there. There's no imbalance for us to trade into. So what do? Well, if you go back to the 5 minute time frame, you can see there is a little fair value gap there on the discount, and this is what I was talking about earlier. There's a little fair value gap there on the premium, sorry, of that OTE, and that should be your entry. You can see that should be your entry. Price respect these things. This is algorithm, trust me. It might take longer a longer period of time for price to hit your entry or price to play out. But that patience is what you should have as a trader. Okay, so price breaks that low. You can see there after sweeping a high and trades into a favorable gap in a premium before selling back to that new week opening gap. Now look at how price respected that new week opening gap and also respected on the first hour of the new day. This right here, remember what I said in the new week opening gap lecture, that once you have price with a perfect respect on a new week opening gap, don't by any means go against it. If you went against it when price respected that new week opening gap on Wednesday, and instead of buying you were selling, that you went against that respect, you are doing it wrong. If you now go against this respect, let's say this is Thursday, dropped all of these multiple fair value gaps, and on Friday you are expected to be selling on any of these previous day fair value gap you want to be selling, ignoring this perfect retest on the new week opening gap, you'll be doing it wrong. What were you supposed to do on Friday? Because Friday you're no longer looking at any of this previous week or sorry, any of this previous day fair value gap. You're looking at how price responded to this new week opening gap. This is acting as a support. That's telling that okay, we are ready to run for another liquidity. This first high, that first high there, we had no setup on the New York session, but we had a setup on the London session. So that's to say I did not trade anything on New York or on Friday. I not see any setup there because if I had traded the London session, I would have picked that intraday MD setup, right? So like I said earlier, for that Tuesday setup, if you know very well that price is ready to run higher and price is ready to use this fair value gap, then what is the harm in taking it? You just place your buy order there, or you wait for price to drop into the inside that fair value gap before you buy. Stop loss at the very first low and your target at the previous high, at the whole high. So that was Friday setup, and I don't know how many setup you took out of all this I've explained, but Monday there was no setup. Tuesday I took the buy, which was 2 weeks to reward ratio. Wednesday 13 weeks to reward ratio. That's buy of the retest from the new week opening gap. Although there was another particular thing I use as confluence on Wednesday, but I'll be talking about that on the next lecture. So stay tuned and turn on notification if you haven't already. Thursday was the sell. I did not take that, but that was a very good sell. Friday, I did not take that, but it was a very good setup on London session. So you can see what I'm trying to say is that you don't need to trade every day. Just few trades a week, high probability trades only, and you're good for the week. If you go in every day and try to be right every time, you're getting it wrong. Okay, you're getting it all wrong. Anyways, I want you to study these things. Don't take my word for it. Study this week price action from the bias to the entry, and where you could have put your stops and where you could have put your targets. Everything, study it and write every single thing you find out, all your observation, write it on your journal. Okay, so let's look at the weekly forecast. Okay guys, the weekly forecast, like we do, we always look at dollar first. Well, this is an old marking. I've not marked anything yet, right? This is an old marking from the previous weekly forecast. So we had price take out this low, and we have a sell side imbalance, buy side inefficiency there. That's the CB, and you can see this weekly fair value gap. I wanted price to trade into 2 weeks ago, and you can see how price is doing that. Very perfect, very perfect. If you go to the daily time frame, this is a very large CB, that's sell side imbalance, buy side inefficiency. You should know that already by now. Price is likely to reach for the extreme fair value gap there, but dollar is going to sell again, and once dollar is ready to sell again, that's when you see everything flying again. Euro USD, GBP USD, Nasdaq, any quote pair, everything will be flying again too. This is not a must. Correlation is not a must, but it's like an additional tool for confluence, right? So we don't want to be talking about that too much. We want to look at the main pair we analyze. What is it doing? So let's look at Euro USD. Okay, so I explained this on Euro USD. That's the high to the low. If you have this thing, this kind of thing, it always happens every time on the chart. If you mark out the high to the low, 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 high to low, every time price will always reach for premium if it's selling. If price takes out this high, then we've turned to buy. I think this is a classic market structure, but I'm explaining it not like a market structure. I'm explaining it kind of in an ICT kind of way. That's premium and discount. You get. So we've broke this low, or we take out this liquidity here, and you expect price to do what? To reach for a drawn liquidity in the premium. This volume imbalance can be a drawn liquidity. I think I mentioned this a couple of weeks ago. This volume imbalance can be a drawn liquidity. I can see how price is respecting that, is rejecting from that level. But we also have a favorably gap up above there. So I will not be respecting this one too much. But it can also be a rejection point, right? It can also be a rejection point. Let's go to the daily time frame. I'm very sure you have your own bias on how you trade Euro USD, but this is my strategy, not working only on Nasdaq but also on Euro USD. Okay, so I had this daily favorable gap marked out and also this one marked out, and my guess was anyone price respect. You can see price give a reaction at the first favorable gap, but does not mean it will respect that. See the first candle drops at the bottom of that favorable gap. The second day rejected and it broke down again to where the second favorable gap. You can see this precision. You can see this precision. Price dropping into that favorable gap very low. This is a very good confirmation telling me that price is ready to buy. So that's to say this level, this level will not hold. We might likely see Euro USD to this level. I don't know what level is that, but you can go to your chart, draw that level, and set your alert there. Because if you respect this daily favorable gap, then we are looking for price to take out this high, just like it did here. Price take out this high, drops into a drawn liquidity. That's if you want to make it more complicated but explainable, you can see that this is a low and the high price trades into discounts before going further. That's exactly what price does, and the same thing price is going to do here. Comes into discounts, look for a draw liquidity, just like the 5 minute OTE and the 1 minute and the 1 minute draw liquidity. That's what price does. So market is fractal, so it doesn't matter if it the weekly time frame, the daily time frame, one, it does exactly the same thing. Okay, so that's that for Euro USD. That's what I'm expecting. If for all the Euro USD traders on my community, expect price to take out previous week low, dropping into that favorable gap, and if you want to pick a swing trade from here to this high, good. That's great, because you'll be making at least that's about 300 plus pips. Wonderful. Let's look at GBP USD from the weekly time frame. What are we expecting? Okay, so just like Euro USD, you can see we have a high to a low, and we are expecting price to trade into a drawn liquidity on the premium because we are selling. It's in a heavy sale. Don't mind the short term buy. It's in a heavy sale. But the thing is, if price does not respect this particular drawn liquidity, then we are no more in a selling mode or in a selling momentum. That means price is heading for that high. But for now, we just want to make this our target for any buy setup you see. Any swing trader that's holding GBP USD can make this is our target. Unlike Euro USD, where price had a you know a favorable gap on the discount for price to retrace to. GBP USD does not have that. There's no fair value gap here for price to retrace to. However, if you go to the 1 minute, the 1 hour time frame, there's likely a low, a sell side liquidity that a price could use. Remember, fair value gaps are not the only draw liquidity. Highs and lows, rejection blocks, there are many other that can be used, liquidity void and stuff like that. There are many. Okay, so you just want to find out any of the drawn liquidity that price could likely respect on the discount. What I mean on the discount is if you mark it out, price is already in the discount. So any moment from now, you can see what dollar is doing. Dollar dollar is currently inside a draw liquidity. That's the weekly fair value gap. So any moment from now or next week, dollar should start rejecting. And if dollar should do that, then GBP USD, Euro USD, everything should start buying. You can see the time and the price, how it correlates. Dollar is in a rejection point. GBP USD, Euro USD are all in a rejection point. So anything that happens right now, all of them start the marathon. They start running to their draw liquidity. That's exactly what this chart does. Okay, so let's look at Nasdaq. So for Nasdaq, I am having this high as my target for Nasdaq, even though we could still be buying after that high, but that's my target for Nasdaq on the weekly time frame. We are taking that high. Until then, we are not in a long term bearish. If you are buying, if you are selling on Nasdaq, it should be in a manipulation phase, where you want price to manipulate, take out a old low and continue buying. Okay, that's all the retracement you see. Even from this point to this level, you can see there are more green candles on the weekly time frame than you see than red candles. Okay, so you should know that we are in a strong buying momentum to this high. But let's look at the daily time frame. What is Nasdaq doing on the daily time frame? Okay, on the daily time frame, we have this valley gap, which was first refilled, and many people feel like we are done because price have refilled that fair gap. But the truth is, oh sorry, we're not done. We are not done. This is Nasdaq. Trust me, it's my baby. We are not done. What price could do on Monday is either take out that relative equal highs. Let me show you. So you see these highs, they are relatively equal. You can see that. So Monday could take out that relative equal highs and head for the sell side liquidity. All of these now ourselves are liquidities because we have a fair value gap below them. Why I strongly believe that, I might be wrong, but I strongly believe that price will still come for this fair value gap. Don't take my word for it, but go and study your chart, go and back test. When a daily fair value gap leaves double, when price leaves double fair value gap on the daily time frame for price to retrace to, it does this. It respects the first one, but comes back for the second one. So the first price action you see there, this all of this respecting that fair value gap, it's not wrong. Yeah, there's a fair value gap. There's a price needs to notice that, but you can see all of that acting as relatively equal lows. You can see first low, second, third. All of these are now sell side liquidity for price to take drop into this second fair value gap before starting the original buy. Okay, so I'm expecting price to do that either this week or coming weeks, but this is my take on Nasdaq. Don't start buying yet, although I might be wrong, but to be on the safe side, trust your analysis. Don't take my word for it. My teachings on this channel are only for educational purpose. All right, so that's my view for price action on the coming week. However, you can still have your own view, your bias, and everything. But if you like this video, if you find the video insightful, if you learned one or two things, then hit the subscribe button, like the video, and make sure you turn on notifications because you don't want to miss that lecture next week. I'm not going to tell you when it's going to drop. It can drop on Monday, Tuesday, Wednesday. I don't want to tell you, but turn on notifications so you don't miss it out. All right. Thank you for your time, and until next time. Be safe.